Hey guys, this is Jared Wesley, president of Live Traders. So there's this thing going around I've been hearing about lately, something called the coronavirus or whatever they're calling it. And I don't mind, I enjoy myself a Corona too. From time to time, I'm sure some of you do too. But I tell you, I just don't understand it. You know, billions of people die every year in this country of old age. Nobody seems to care about them. Nobody seems to have a cure for that. But I tell you, this coronavirus, it sure had an impact on the markets. The markets are getting hammered, kind of like the way I'm going to be in a little bit. I tell you, and I'm sure many of you out there, you're feeling the burn of this nasty market. You know, it's like that itch you just can't scratch, you just can't get to, the burn. Ooh, it hurts. It hurts. So if you don't want to feel the burn anymore and you want to learn how to navigate these markets, what you need to do is you need to come to Live Traders, where we make trading great again. That's what we do here at Live Traders. We make trading great again. And we get to drink while we're doing it. I tell you. So if you're tired of the burn, you just can't scratch that itch, and you're tired of seeing your portfolio tank, come to Live Traders, where we make trading great again. I'll see you guys on the flip side. Man, that guy seemed pretty serious, but nonetheless, Jared Wesley here of Live Traders, guys. And this week's topic, you know, despite the levity, we got to have some jokes once in a while, right? Especially when things are choppy in the markets and people are having a tough time of it, which for me, the last couple weeks, to be honest, was a bit of a tough time in the market. So today, in terms of trade review, usually I do a trade review every Saturday. Well, I'm going to change it up just a little bit today, okay? I'm going to do a trade review, but I'm going to gear it towards trade management. And the reason I'm saying that to you guys, and I'm going to bring it up here in just a second, is that the last couple weeks haven't been good. This past week, I made like $100. The week before that, I lost like 1,000 or something like that. And a lot of people were saying, wow, stocks are not following through as much in certain areas. And I found the same thing to be true. There's just been a lot of choppiness, a lot of whippiness out there. But here's the thing. A lot of folks are emailing saying, I think I should change my management strategy. It's not working that well. Well, here's my management strategy. I typically sell 1/4 of my position at 1R, 1-to-1. So if I have a 50-cent stop loss, when the stock goes up 50 cents, I sell 1/4 of my position. And then when it hits 2-to-1, I sell 3/4 of my position. It usually leaves me with about a 1.75R winner. So on a 50-cent stop loss, it'd be somewhere in the 90-cent range, 88-cent range in terms of the winner. Okay. Well, what we've been noticing, what I've been noticing, and like I said, I'll bring it up here in just a second, is a ton of stocks have been going 1-to-1 and then failing. Okay. So what you're going to see here, and I'm going to bring it up in just a second, is that I'm not doing anything different. I'm taking the same types of trades. I'm using the same management strategy, but in the first week of the month, everything was just running. They were hitting full target, 2-to-1, 3-to-1, etc. In the last 2 weeks, I'm not taking any more trades. I'm not taking different trades. And guess what? My batting average is identical. First week of the month, my batting average was 60%. The last 2 weeks combined, 59%. Pretty similar. You know what is different? My win-loss ratio. My win-loss ratio went from like 2.0, 2.5, all the way down to like 0.6. Why? Lack of follow-through. Now, some of you are going, well, geez, that's obvious. If you know what the problem is, why don't you change? Guys, it's called statistical sample sizing here, meaning 2 weeks of trading is not nearly enough. 22 trades out of the 1,000 trades I'm going to take this year is not enough for you to come in and reasonably say, I'm going to change my trading plan. Now, why would you do that when I've been using the 2R method for, I'm going to say 10 years now, right? 10 years, it's worked way better than say 1R or nothing. Now, after 22 trades, people are saying you should change your management method. I'm telling this to you guys because too many of you are chasing your tail. All right, stick to one management approach. Why? Because you need a large enough sample size to make an accurate determination of which one is better, okay? I would say an accurate, large enough sample size is a minimum, bare bones minimum of 200 trades over a 3 to 6 month period, okay? You need a large sample size over a lengthy period of time because markets do a lot of different things, okay? So let's take a quick look, guys. I'm gonna show you this past week, and I'm gonna show you the difference between if I was doing what I normally did, which you'll see, versus if I were doing 1R. So let's take a quick look at that, guys. Let me bring this up on the screen, okay? All right, so you guys can see, during the last 2 weeks, okay, I have taken 22 trades. 22 trades. I had 13 winners to 9 losers. I had a 59% batting average, but my gross Sharpe ratio or win-loss ratio was only 0.56, which is terrible, terrible, okay? But take a look at this for a second. I want you to notice, most of the losers stopped out full. That's somewhat normal. But the winners is where everything was different. And as I said to you guys, when they go 1-to-1, I generally sell 1/4 and I move my stop to break even, which means I can't do worse than making 50 or 100 bucks on the trade. Well, let's take a look here. CRM, it went 1R, stopped me at break even. Garmin went 1R, stopped me at break even. BTAI went 1R, stopped me at break even. Tesla worked, thank goodness. On this one here with DE, this one worked, thank goodness, although I didn't get my full target. QQQ, 1R, stopped break even. UNH, 1R, stopped break even. BYND, 1R, stopped break even. Etsy, 1R, stopped break even. CRM, 1R, stopped break even. SQ did the same. I just got more money from it. TTD and MMM, same kind of a thing, although MMM just barely missed the 2R target on this. Guys, what I'm getting at simply is I've done nothing different. It's just the winners didn't go. They all went 1-to-1 and then they failed. They went 1-to-1 and then they failed. Okay, so I ended up over the last 2 weeks, as you guys can see, I lost $988 in the last 2 weeks. So all of that was 2 weeks ago. This past week, I actually made money, albeit not very much. I only made about 100 bucks this past week. The point I'm simply making is I'm not doing anything different. I'm not taking any more trades. In fact, let's go to 2 weeks ago. Or 3 weeks ago, at the first week of February. And I want you to take a look. The batting average is the same. It's 60% versus 59%. But look at the Sharpe ratio, 2.62 versus 0.59. Now what's the difference? Guess what? First trade, full winner. Second trade, full winner. Stop out, third trade, full winner. This one was a partial lot. Fifth trade, full winner, full winner. Guys, I took 10 trades. I average about 10, 12 trades a week. Well, on my bad week, I averaged about 10, 11 trades. Good week, 10, 11 trades. Batting average, the same thing. The difference is on the good week, they ran. They went 2-to-1. They went 3-to-1. On the bad week, they didn't. That's it. So do you really think after 2 bad weeks, I'm going to change my trading plan? No, absolutely, unequivocally not. It's not a large enough sample size, and you shouldn't change your plan either. This is where most traders make a big mistake. Not only do they change their trading plan, they run from chat room to chat room and method to method and style to style, and all they do is chase their tail and chase their tail and chase their tail, okay? That is a problem. I have a management method that works. It absolutely unequivocally works, but there are weeks out of the year, heck, there are a month or two out of the year, it does poorly. All right, February has not been a great month. I'm only up about 7R this month, which is not very good. Okay, but I'm not getting hammered and the market's getting crushed. Okay, next month will likely be better. Why? I've been doing this 15 years. Out of 12 months, there's always 2 crappy months. Maybe February is one of them. But I'm not going to change my management approach over it. Now, I did want to show you one other thing. Let's take a look. The past 2 weeks, if I had done 1R all or nothing. You guys are going, oh my gosh, Jared. So you went from losing $1,000 to possibly making $2,000 if you did 1R or nothing. I told you 1R was better, Jared. I told you it was better. But again, it's too short of a sample size. But it does prove the trades we are in are good. They are working. There's nothing wrong. It's a 59% batting average. But they just didn't go 2-to-1. Okay, you have to understand the statistical relevance of the management strategy that you're using, and you have to understand the drawback period as well. Here's the flip side though. So this would have made 4R in the last 2 weeks, which isn't great either, but it's better than minus 2R. Okay, it's not great, but it's better. But take a look at this, okay? The first week of the month, instead of making 7R, it only made 3. It made less than half as much. So at the end of the day, on this particular month of February, guess what? They would have been the same. 2R and 1R ended up being the same. But what happens 10 out of 12 months of the year? 2R crushes 1R, crushes it, doubles it. So at the end of the year, you end up making 200R using 2R, and you'd make about 100R using 1R. So why would I change over 2 bad weeks? You have to understand and appreciate, guys. If you flip a coin 10 times, you're probably going to get 5 winners and 5 losers. But guess what? You might start with 5 straight losers, and then you get your 5 winners. But every once in a while, when you flip a coin 10 times, you could get 7 losers and 3 winners. Sometimes you get 8 winners and 2 losers, right? But you're looking for what happens most of the time. And this is what most of you guys are missing. And when any slight trouble happens, you guys go crazy, like the rest of the world's going crazy, right? Oh my gosh, the market's down 15%. Nobody was complaining when the market was up 29% last year, were they? Nobody was complaining over the last 10 years, which was statistically the second best decade in market history. Nobody was complaining then. But you have 6 bad days in the market, you're down 10, 15%, and the world's going crazy. Why? Stop. Get a hold of yourselves. Get a grip, guys. So you had a couple bad weeks trading. Maybe you didn't. Maybe you had a couple great weeks trading those one-trick biotech stocks trying to get rich quick. I don't know. But you cannot change your management until you have at least 6 months of data, 200 to 500 trades, and then you can make a meaningful adjustment. Anything else is just conjecture. You're just guessing at that point, okay? Anything can be statistically relevant over a very small sample size. But over a large sample size, statistics tend to what? Even themselves out. Okay, so I really need you guys to understand this, and I'm using my own personal trading as the guide and you to judge. You need to do the same thing with your trading. Trade management matters. It really does, but you have to do it long enough to let the sample size be accurate. Okay, I hope that makes sense to you guys. All right, I try to do these lectures every Saturday. This one's a little bit shorter. It's not my traditional Wednesday one where I'm an hour long. And by the way, that reminds me, I finally did a tax lecture that you guys have been begging me for years. And nobody watched it. It's my worst performing YouTube video over the last year or so. Worst performing one. So apparently it was just a very small group of vocal people who kept bugging me for it. And the rest of you didn't really care about it. It doesn't matter. It's out there. It's a good video. If you need information about trader taxes, check it out. Nonetheless, I hope you guys learned a little bit about trade management, statistical probability and relevance, needing a large enough sample size, and understanding this too shall pass. You have a bad week, a bad couple weeks, a bad month, you'll get it again next month, as long as you are following your trading plan. Do not break the rules of your plan. Do not change your trading plan. Just continue to follow. And that is the biggest difference between a good trader and a bad trader, is how frequently, how often you follow your plan versus break the rules of your plan. All right, this is Jared Wesley, president of Live Traders. You can get a 14-day $1 trial into our chat room. And one more thing, if you enjoyed this video, then you're going to crush that like button, hit the subscribe button, because if you don't, oh boy, I'm going to call you out on Twitter, and you don't want that. I'm a mean son of a gun on Twitter. You don't want me trolling you on Twitter. Hit that like button, smash that subscribe button, and I'll see you guys next time. To get more great educational content, subscribe to the Live Traders YouTube channel. This way you'll get email alerts every time I upload a new video.